I just came across a new development in Kenya that is worth talking about. Many Kenyans are losing billions of shillings to Forex trading, and this is despite Forex being shown or displayed as a way to make quick money and accumulate riches, mainly on social media. According to new data by the Capital Market Authority, that's the regulatory body charged with the responsibility of regulating online trading platforms here in Kenya, Kenyan online forex traders lost 7.12 billion in 2025 alone. And during the same year, the winnings from trades amounted to only 1.25 billion. And if we do the calculations, we deduct these gains from the losses, the net loss recorded was approximately 5.8 billion. That's huge and very significant. And the losses increased substantially compared with the previous year, 2024, when traders only recorded gross losses of approximately 4.8 billion. And according to the report, active forex trading accounts fell by approximately 46.2% to 152,000 accounts, and this means that while fewer accounts were actively trading, the total amount lost by traders increased significantly. Also, CMA revealed that losses came or were recorded by 77.58% of these accounts, the 152,000 accounts. And in simple terms, nearly 8 out of every 10 active trading accounts were unprofitable. And I want you to hold this figure, the 77.58%, and we will come to it later. So these figures came from forex brokers that are licensed here in Kenya. So spare me because I will not mention them. I'm not into the business of promoting them or forex trading as well. So, and remember, there are many global online brokers that many Kenyans use to trade forex. So the losses to online forex trading is enormous. It's higher than this, because what about those who are trading using other global online brokers? So the figures provided by CMA might be a small percent of the huge losses incurred by Kenyans. Also, the development, just this news does not mean that 7.12 billion was stolen. It doesn't necessarily mean that traders were scammed out of the money. Rather, the money was lost through trading activities in the forex market, which is not a scam. Now, why are Kenyan forex traders losing so much money despite the lavish lifestyle that we are being shown out there by a few Kenyans who reportedly do forex trading? Well, there are multiple reasons. The first factor, this is the major one, is the high risk nature of leveraged forex trading. You know, profits from forex trading are made from small changes in currency prices, but these changes can't amount to any significant profits. This is where leverage comes in. In forex, leverage is it's like a temporary loan that you get, or the trader gets from a broker that lets them control a large currency position using a small amount of their money. So, for example, a trader may deposit a relatively small amount of money but gain exposure to a much larger position. Leverage is shown in ratio like 50 to 1 or 1 to 50, 1 to 100, 1 to 500, 1 to 1,000, up to 1 to 3,000. And in Kenya, the SMA or the Capital Market Authority caps leverage at 1 to 400 for locally licensed online Forex exchange brokers. But many international brokers accessible to Kenyan residents offer much higher ratios, such as 1 to 2,000, 1 to 3,000. I've seen 1 to 3,000, and that's very high. It's a very high leverage. The high leverage can look attractive because it creates the possibility of making huge profits, but there is a catch. Leverage works both ways. The same tool that can multiply your profits can also multiply your losses. So if the market move against you, you can lose money extremely quickly. This is where many inexperienced traders get into trouble. They enter the market hoping to turn a small amount of money into a fortune, but the higher the potential reward, the greater the risk they may be taking. As a result, many traders end up losing their money. And in fact, many online Forex trading platforms include a disclaimer that 2 out of 3 traders lose their money when trading Forex. And in terms of percentage, that's about 60 to 70 or 60 to 80%. So remember the earlier figure given by SMA that 77% of accounts, those trading in Kenya, lost their money in 2025. So this figure is within these margins. So the warning provided by trading platforms or trading brokers is actually is factual, and unfortunately many people ignore it completely when starting to trade. So that's one factor. Another major issue is the image of Forex trading that is created on social media. For many young Kenyans, Forex trading is introduced through Instagram, TikTok, YouTube, Facebook, WhatsApp groups, and even Telegram channels. And then the message is often simple: learn Forex, trade from your phone, make money from anywhere, become financially free. But what you don't always see are the losing trades. You don't see the trades or the traders who have blown their accounts. You don't see the people who have deposited money repeatedly after losing. And you don't see the emotional stress that comes with watching your hard-earned money disappear. Instead, social media often highlights the winners only. The person who made 1,000 Kenyan shillings in one trade, or 100,000 in one trade, the person who bought a new car, the person who claims to have made millions trading currencies. But one person's success does not tell you the probability of success for everyone else. So the latest Kenyan data suggests that the majority of retail traders are not winning, they are losing. That's the fact. So another major factor is the reality in our economy. Kenya's economy is not doing well when it comes to creating jobs for its citizens, especially young people. As a result, many people, or especially young people, are turning into Forex trading as a way to make quick money. And instead of investing into the real economy, they opt to go for risky investment like Forex trading and other risky investments. And I think this is not just losses to it. The losses that were incurred to Forex trading is not just losses to individuals or those people or those traders, but it's losses to the country as a whole. It's one of the trends contributing to the widespread poverty and the high unemployment in the country. So, and it's sad. We need to do something about that. So what are the lessons from this? The biggest lesson from these numbers is simple. Forex trading is not easy money. It may be possible to make money. Some traders clearly do, but the data shows that the majority of retail traders struggle to make consistent profits. And that's something anyone thinking about entering the market needs to understand. Before you deposit your money, ask yourself, do I understand how Forex works? Do I understand leverage? Do I have a proper risk management strategy? Can I afford to lose the money I am putting into the market? And perhaps most importantly, am I trading because I understand the market or because I want to get rich quickly? Because if you are entering Forex with the expectation of becoming wealthy overnight, you may be putting yourself at serious financial risk. I also think it's high time the country tightened the regulations of Forex trading, and one of the areas the government must focus on or should target is what is happening on social media. It's time we control the information being shared out there by social media influencers who I believe are just promoting Forex trading activities or certain Forex trading platforms. The best way to achieve this is that the government should require social media companies like Facebook, TikTok to control such or to limit such content or even ban it completely. Another area that the government must target is the widespread Forex trading training courses. Many innocent Kenyans are losing their money to these trainers who display themselves as gurus in Forex, but their intention is only making money without risking their own money. They display their expertise in analyzing the charts and the candlesticks, but when it comes to actual trading, they can't survive. They don't have proof they even trade. And in fact, someone told me, the easiest way to make money from Forex is to train others because you'll not be risking your own money. So I believe we need to regulate this. And a good way is I don't think we should ban it. And a good way should be to license the traders. We can require specific education qualification or requirements for trainers, like only people who with qualifications in finance, maybe a diploma or a bachelor's degree in finance or any closely related program. And don't get me wrong, I'm not saying Forex is a scam. People can make money from Forex trading or do Forex trading if they understand what they are doing. What do you think? Do you believe Kenya should tighten regulations around Forex trading and the promotion of Forex on social media? Or should Forex trainers be required to meet certain qualifications before offering paid trainings? Please share your thoughts in the comment section below. That's the end of this video. Thanks for watching, and don't forget to like this video and also subscribe. Please subscribe. It really helps this channel grow. I'll see you in the next one.